The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to another wonderful edition of the Power Trading Hour with me, your humble and lovable and squeezably soft host, David White. It is June 11th. We are getting into the summer, and we are really going to have a interesting trading market. And we'll get into that just in a second. We've been down, we've been up, and we're down again, and it's going to get, I suspect, very ugly. I think we're going to get a confirmation here very soon just how much worse it's going to get and why. I think most people are picking up on the wrong thing. They're picking up on the symptom and not the cause. We'll talk about that a little bit more. On this day in 1982, E.T. the Extraterrestrial was released. One of the, I guess it really was kind of at the, you had Jaws in, 1976 is the summer blockbuster, and then 77 Star Wars, or 78 Star Wars, and then Star Trek, and then I think E.T. was the summer blockbuster for 82. And you got a lot of these movies that are starting. And in fact, I guess a lot of people are going to the movies. But as far as I can tell, pretty poor pickings out there. All special effects, not much story. I was in special effects. And the one thing I hate to see is special effects for the sake of them and leaving the script behind as a secondary. They're willing to pay any amount of money for special effects and none for the underlying story. By the way, if you do have an opportunity, want to go see a good movie, it may be hard to find, but probably the best movie of the summer, although you won't hear much about it, is called Mud. And it's a Matthew McConaughey movie, and very much in the tradition of Mark Twain, Huck Finn, Tom Sawyer kind of thing. But almost 100% on Rotten Tomatoes. One of the better ones out here. Steven Spielberg reportedly drew on his own experiences and unusually imaginative, often lonely child of divorce for a science fiction classic. Always thinking about that. Okay, let's get to the markets actually right now. We opened way down. They rallied up almost to, a little positive on the Dow, about 4 points shy of going positive on the S&P, where this thing turned around and is rocketed back down to 15 points off. So we're a good 11 points lower than the push out here. We've got the news outlets showing Turkey with riots in Istanbul Park. In the if you've ever been there, especially in Europe, they've got these massive squares without much in there where everybody can go hang around. But looks like everybody's not having too good a night there. Lots of smoke and water cannons, and going to be kind of ugly out there. I think there is. This is just a series of issues that are going to get probably worse through the summer. I think today's action probably. We're going to look at the volume by the end of the day, but certainly looks to me like we're setting up a move back to somewhere in a 1-to-1 ABC would take us to probably 1555, 1558 on the S&P cash, and I think there's a lot of evidence to suggest that's exactly what we're going to do. Probably first stop on the Dow is 14,700, and the NASDAQ could just blow apart. As it is probably the weakest of them all. Also, the problem would be if the wheels come off the Apple bandwagon out here, and this thing does not look good. We've got to watch for this thing to close below 1435. If it does, it looks like we'll have a lot more issues. We've got a lot of the tech leaders out here weaker today. Google's off almost 9 points at 881. We've got Facebook, which is coming after just a rout of upgrades, self-serving upgrades, in my opinion. It's off 27 cents. Microsoft's off 64 cents. Intel's off 24 cents. Most of those probably going to hold up better than the rest of the tech market. Google, Microsoft, Intel probably the strongest at this point. Stocks that could fall apart are Apple, IBM, and Amazon as we look at the tech sector out here. We also have a sector out here that has been fairly strong. Let me see if I can find it here. Which one is this? I had it here. What did I do with it? Let's just go back to this one. The financials, and we're getting just a huge movement in that. Morgan Stanley, off 3% MS. We've got Citi off 3.4%, J.P. Morgan off 1.4%, Wells Fargo off 1%, and even BlackRock off 1.5%. So we've got action out here, and as I used to say in my first trading room, smaction. We got some action. But a lot of that's going on around here. So I want to just update some other stuff here because we do have a market that is fast and moving well. See if we have anything else. Just wanted to check out here. Okay. First of all, Apple. Just going to do a little warm-up. In fact, why don't we go to the... let me go back to this just to keep an eye on this thing because we do have a very fast-moving market. Apple yesterday, when we distill it all, it looks like iRadio will not make a big change to Apple's bottom line at all. I went through a lot of the videos, and it was mostly fluff, not a lot of substance. Certainly nothing revolutionary, all evolutionary. I suspect that below 435 will take us right back to probably the low 390s on Apple, and I imagine we'll probably get most of that in a couple of days when that does break. It looks to me like there's a lot of distribution going on in that. Lululemon's off of about $13. The CEO is leaving, but one thing the market did not like, or two things they didn't like, is that there's no heir apparent, so they don't know who's taking over. She just said she'd leave before the end of the year. They are also coming off the Toronto Stock Exchange, and that's causing a little bit of a selling pressure. We also have the spin doctors out here that are pushing expansion into men's stretchy bicycle pants, just what I don't want to see. So I've seen a couple of those gals with those Lululemon pants Sunday morning at the grocery store, and I don't think. I think it's they could be thinner if someone sprayed them on with a spray can. Certainly was able to see everything, if you know what I mean. Not a lot, nothing left to the imagination. Well, what can you say? Anyway, these spin doctors are pushing expansion in men's stretchy pants and bicycle pants, and just what I don't want to see. I see enough of that from the French men down here on the beach come every March. The bigger the gut, it's almost a given out there. There's an inverse proportional arrangement between the size of the Frenchman's huge gut and the smaller size of his Speedo. I certainly don't need any more of that. A plague on them if they try. Claude's Copper Clappers. Copper closed the lowest in a month. I want to thank Jim Grant from Grant's Interest Rates Observer for coming up with this a year ago. But he has always said that copper was the only metal that came with a PhD in economics, and I had to say that it was probably pretty tough holding through some of these moves of being short, but I continued to watch copper, and there was absolutely nothing in there that made me think that there was a change in the broad direction of this market that was headed lower. In the setting sun, the UK was off 1%, Germany's DAX was off 1%, 1.4% off on France CAC, Spain was off 1.7, Portugal off 0.7, Italy off 1.6, Irish are off 1.5, and Greece was off 4.7%. Probably not the big news out here. We'll get back to L. Arian, but he's made a nice case for that. But I started talking about it Monday and in my newsletter on Friday, and that is the wicked moves in the LIBOR rates in China. I think a lot of people are saying it's all about Japan and Japan's bond moves. I suspect that it all has to do with the underlying weakness and instability in China right now, and that's being telegraphed through Japan and what everybody else is looking at in the market now. But I think it has a whole lot to do, less to do with whatever the equivalent of the Japanese Fed is doing over in Japan, and a lot more to do with the underlying instability in China. These kind of moves are absolutely massive and tell me that there is something rotten in Denmark in the underlying banking industry of China, and hopefully we'll see some more about that in a little bit. We're holding steady right now at 1630 on the S&P cash. Looks like a lot of people want to come back in every time they see these lower prices and take a dip in there. We did gap down fairly strongly. Of course, the go-to Pavlovian response was to buy it. These people have not been rewarded unless they bought at the absolute low and sold at a higher price out here, but we're going to continue to see that. We do have one thing that we have not had in about 3 days, and that is volume. We're going into 2.4 billion shares on the consolidated New York Stock Exchange tape, and that tells us, again, we've got action. I want to see what the close is like out here, but we are going to probably have a 4.5 billion share day, which is certainly much more extensive than most other things. We've got Ron from Denver. How you doing today, Ron?
Hi, David. I was wondering if you'd do me a favor and just take a look at Avnet, AVT.
Hamilton Avnet. Very familiar with this company, as we used to buy absolute tons of stuff, if it's the same company. Pretty sure it is. Used to be called Hamilton Avnet. Just make sure.
I didn't know that.
We're going to break. We'll be right back in a minute. Yeah, same company.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. We've got Ron from Denver on the line, hopefully still. And so what were you thinking about doing with Avnet here? It is the company I remember and it did an enormous amount of business with.
I got some calls on it a couple days ago, and I just wondered, with this correction you're expecting, should I get out or should I stay with it? I have July calls.
I'm looking at this as an ABC down back to $28.82.
Okay.
So, yeah, I'd be taking my money here. My guess is that this will hold up probably for a while and go sideways and then head on back down to $28. But, we've got part of what I didn't get into yet in my original opening monologue is tomorrow is the Delta Neutral Day for going options. Delta neutral for option market makers. I thought maybe to begin with this was some of what they were doing, but just the reaction from the world markets tells me probably has very little to do with it. When there was a lot of manufacturing in the United States for electronics, kind of probably not a bad deal. Now they just tend to be a giant distributor of products like hard drives that you can get from a lot of other people. There isn't a lot of value added that they can do. When we used to buy parts from them, if we had a lot extra, we could cycle them back to them and return them, stuff like that when we were manufacturing. And that's really just not much of what they do anymore. So I'm not a big fan of computer or electronic parts distributors for the most part. I kind of see what you're looking at, but to me, this thing really looks like it's rolled over. I'd be out of it.
Okay, thank you.
Thank you very much. You bet. I just never like when I look at this chart, I really don't like the risk reward on this thing. You still have kind of a high volume load out here at 3102. I suspect if you were thinking about going long, you'd probably want it to get back in there one more time with a lighter volume. You get back in there with 600,000 shares, maybe I would be buying calls on this. But to me, I just don't see. I mean, there are some nice green sprouts in this industry with all the manufacturing and development going to Austin. And a lot of those old Motorola locations being recycled and rehabbed to start making at least some products in the United States. But if Avnet's just selling hard drives and computer cases, probably not a lot of margin in there. Anytime they make any kind of mistake on a low margin business, and basically they are the grocery store for electronics. They just don't make that kind of margin anymore. And I've always, you never know when they screw up a little. It is a huge amount, just like the grocery stores. Any kind of little fluctuation becomes a huge issue in them. Anyway, I wanted to get back to some of the other things. Anyway, we were talking about China. It just every time I look out there, I see almost no discussion of these LIBOR rates out there in China, and they tend to be going pretty good. Of course, everybody's going to focus on water cannons and people doing and burning stuff in Turkey, but I think it has a lot more to do with some of the things we're going to see. Of course, we got the G8. We're going to probably have some more riots about that, a whole thing about austerity, but I have a feeling that there's a bigger structural issue with China right now, and until these pass, I think we've got the opportunity for a highly unstable market, and that's exactly what we can actually see, I think, before the end of the day out here, going into this delta neutral options expiration move tomorrow. I think we may have seen some of that already in the push this morning. And I didn't have an extensive amount of time. I'll do it after the end of the show. But my guess is it looks to me like during that push, most of the option market makers were pushing out as much stuff and trying to get and set up for a lower close on expiration somewhere around that 1575 level. But again, probably not going to get a good read on it till the close today, and a little better idea of where the big guys on the street think we're going to close. But cursory right now looks like they think that in a week from Friday we're going to be closing around 1575. At least that's the preliminary bets right now. We'll be back in a minute. We'll start looking at some of these stocks out here and see what happens, what goes.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, El Arian was out, of course, from BIMCO with a slide titled "A Giant Sucking Sound." He's talking about the reasons that he thinks that there's going to be kind of a choppy summer out here. One thing he's talking about that does make sense is a VAR-based accounts. That's a value at risk-based accounts. And one of the things that has happened, and very smart for him to point it out, is that the amount of money that you can have at risk for these VARs are set pretty much by the VIX. As the VIX goes higher, you have to take off some of your risk, and as long as they stay in this VAR, then they can at least claim that they were trying to manage these accounts and the leverages that they have under them. But part of the problem is as soon as it gets volatile, they have to start selling to stay in these formulaic value at risk-based accounts, and it could cause some rapid selling into this market if it lasts very long. Normally they use like 15 days. I think that there's been kind of a concerted effort by the Fed to make sure that volatility stayed low. Unfortunately, the longer you keep that, it's like backing up a dam. eventually that dam will break. I think we're starting to see at least some levels of it. We're off 11 points on the S&P cash right now, 2.4 billion shares. It got real quiet here in the last 10 minutes or so. I suspect we're probably going to see most of the action again in the last 30 minutes of the day. But we're seeing, I think, the VIX probably setting up to go back and check out at the highs today and not the lows. But we'll continue looking at that. We had a few stocks moving out here, and one of them is Google. And let me pop that up real quick. Google's moving a little bit on buying a company called Woz, Israeli company. Basically, they are a crowdsourced mapping startup, and that means that you can add things at various locations instead of Google doing it all. I suspect that they didn't want anybody getting into that map business and bought them just so Apple would not have them. But probably adding a few social things along the way eventually to the Google Maps to make sure that it stays ahead and in front of a lot of what Apple has been doing. Apple's still way behind on Google Maps, but Google, pretty smart guys, are not going to allow much in the way of these guys to come in and let the wrong dog come back in. Again, we were talking about the financial stocks out here that looked somewhat problematic. I want to check back with them just real quick, so take a look at them. Let's take a quick look at MS, see where this thing is headed. You still don't have a break up here. Let's turn the overlay back on. You still don't have a break big enough out here to say that this thing has failed. Let's see. Let's go to 9-day. You're awful close. You've had your 15 days closed back below. Anything that closed back below the 9-day moving average would probably put a fairly decent top in this one. Let's take a look at C real quick also. You already got Citigroup out here confirming this thing has made a top. What you look for in the either 3x3 displaced moving average to put in these the Joe DiNapoli double repos is 10 to 15 days above it. The 9-day or 3x3 moving average, a couple of days below it, a pop back above it. This thing really looks like it's pretty much confirmed that this thing has put in a high. Let's take a look at it. JPM. Ooh, and another one out here. This double repo pattern is pretty darn good. I would have liked to seen one more day on JP Morgan here if you're watching on a Tiger TV, close above a 9-day. But you look for 10 to 15 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So you got 15 days above the 9-day moving average or 3x3, a couple of days underneath it. You'd like to see a day above it or two, but this is actually acting a little bit even weaker out here. We've got Mike from Lakewood calling, and we'll go to him. How you doing today, Mike?
Pretty good. How about you?
Good. How you do? So what do you want to look at today?
GameStop. I don't own it, but I heard you talk to Tom about it. I guess it was about around 2 weeks ago that how they would be affected by, I guess, Microsoft's new policy on used games. And They came down pretty strong, but in the last couple of days they've come back almost back to their 2-week high. So I like your opinion.
They made a deal with Sony, and basically they're going to become a Sony shot because they're going to get basically cut out of anything that Microsoft does. Microsoft's new Xbox One, which will ship late November, 1st of November, is going to be about $500. They're going to be able to sell the. Microsoft also showed a new version of the old Xbox 360, yesterday, and they're going to sell that for like $250 or $300 or something. Those games will still work for GameStop, and there's still going to be those games, but the new version has to be plugged into the internet. Every time you run your game, it checks to make sure that you're logged on. If anybody's ever played a Steam game, they know exactly what I'm talking about. Every time you try to run one of the games, it connects to the Steam server. Make sure you're a licensed version user of that, and the more expensive games all have it. So it's not anything really new. The difference is going to be that they have to check every single day. Now, on GameStop,
what I'm wondering, I don't mean to interrupt, but I'm just wondering, is this deal with Sony really warrant that kind of a run-up? Because they're up almost 20% in a couple of days.
I think Sony's out of the game box business as soon as the Xbox One comes out. They're 7 years into their PlayStation equipment. They've got a new version of their stuff, but it seems to me like Microsoft is going to have it hand over fist because of the Kinetic product, and a lot of the new games that are going to come out are going to use it. And I just don't see where Sony has the heft or the things that Microsoft's going to be able to do to make it more than just a game console. They're kind of making this thing as the way to play your Netflix, the way to the thing that you want to have in your living room.
Right, it's an entertainment center console now, in addition to being a gaming console, correct?
Right, yeah.
Okay.
Now, here's when I was talking about the double repo pattern. This is one of the biggest ones I've seen out here. And if you get another close below the 9-day moving average out here, the idea would be that this thing would fall apart. So you may have to hold your fire for a little while and keep an eye on it. Let me go back and just try the displaced moving average. So, either one of these, but I've always done my testing with the displaced moving average. But you get any kind of close much below $36, and the wheels should fall off the wagon on this back to $23.
Okay, well, that's what I'm hoping to hear from you. I'm, like I say, no position yet, but I'm looking to short it, but I don't want to go too early. So.
Now, I mean, you could short this thing on a test of 39.87 if it got back up there on lighter volume, but my guess is that everybody got short on that huge move down. They're getting squeezed out now, and this thing's going to have a very low short interest, and it's going to just roll over, and that'll be it. Unfortunately, I guess maybe, or fortunately, we've had such high short interest in the stocks that have been horrible that as soon as they move, everybody just short squeezes them out of the way. And this is exactly what happened in the dot-com bubble top and made the markets just incredibly whippy over that entire 2000, even late 1999, 2000 year. Everything looks to me exactly the same, and that is you're going to have huge moves down like we saw in the S&P and the broad indexes, huge moves back up, although weaker, and then huge moves back down. So we'll continue to watch this market. We get a close below like 1625 on this market today. It's going to be incredibly bearish. You're going to probably see everybody talking about jumping from the windows and everything else into the world, but I don't think it's that bad. But I do think we could easily get back to 1575 in a heartbeat and probably 1550 for a day before expiration. So,
I'm sorry, go ahead.
So watch this very closely. I haven't looked at the options on this. You're getting into expiration, but I don't know. Probably July's. I probably wouldn't. I'd look at this and see what those are doing. You'd probably have to take a shot today or tomorrow on this thing if you wanted to buy the options. If you wait until this thing closes back below, my guess is the premiums are going to skyrocket. So
you're talking about July options because June's not far enough out now, I would guess.
Right, yeah, they could make this thing hang out for a week on the shorts, but this thing has got every indication that that this thing is going to be problematic for the fall. And I think a lot of people are going to try to start getting out of this. I've seen so much distribution in a lot of these stocks that have had weakness just fundamentally, And this one, like GameStop, when you know that when October rolls around, kids are not going to be asking to be buying the old games. In fact, they're showing this week all the new games, and they are heads and shoulders above, what is 7-year technology from both Sony and Microsoft. So I think, you're going to see this stuff really pushed. Microsoft's probably going to spend $1 billion advertising it, and you're not going to be able to resell the games from GameStop, which is where they make the bulk of their money.
Right.
Have you seen the GameStop ads?
A little bit, but I'm going to be looking for them now much more now that I've got
the ads are kind of interesting because, or several of the ads are interesting because the idea is that you go into this game exchange kind of company, and the guy goes insane because he bought this $100 game and he gets offered $7 for it, and they're throwing things out the window, and it's quite comical. But it is not too far from the truth. A lot of these game companies are giving almost nothing for these games and then trying to resell them and making huge margins. And without that, GameStop is going to have a very tough problem because they're going up against Walmart that's willing to take 5 or 7% margins on these new games.
Right.
And GameStop can't live without that resale business on it. And Microsoft pretty much, especially what they've released the last day or so, it's going to be up to the game manufacturer whether they participate in it. But it's the only way that anybody's going to get a taste of it on that side is going through Microsoft's thing. And if you want to do a little more research on it, check out Steam, which is kind of the business model right now for most of those games. Where you have to log into the Steam server, and they make sure that you don't put cheats on it, because a lot of people would modify the code so that they could have an advantage against other people that are playing online.
I'm not a gamer, but I understand what you're talking about. Cause
I've
used Microsoft software like Word, where you have to type in the 20, whatever the number code, digital numeric code is, into it, and it verifies it on your computer.
This time, every time you run the game, it checks with the server, validates it against the serial number in the box, and there's not going to be a lot of piracy, and there also isn't going to be a lot of people able to cheat on this because they're going to do the same thing. Microsoft's going to run pretty much the game servers for this and make sure that if you do anything like try to cheat, you're cut off of all games. So it's kind of a good thing if you're a gamer and you don't like cheaters out there, but it is, this stock, I think, has a particular weakness out here that after this week and all the PR about new games and new systems for Sony, they were out hawking it today on CNBC, and I think that's kind of why you're seeing a little of this pop in GameStop and talking about the deal with Sony. But I from looking at it and the reports I've read last night, real yawner from Sony so far.
Okay, well, thanks so much. And one more input for you. I was looking at the July puts, and if you go down, GameStop's at 38 right now, roughly, and a 37 put is a little under $2, which doesn't seem too bad considering the volatility of this stock. So
now I think you're either going to be right or wrong very quickly. You're talking about the Julys out here.
Yeah, no, that's July, no, not June, July.
Yeah.
Okay, I hear the music.
Good.
Thanks very much for your time. I appreciate it.
Bye. We'll be back in just a minute. You can give me a call also, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Oh, it just seems like you can't make a day through without bad 80s disco music. Boogie, oogie, oogie, hopefully on the graveyard of forgotten tracks that I will not have to hear again in my life. If we could just get rid of the Disco Steve propensity to listen to crappy music, we'd have it. So anyway, make sure every time you do call up TFNN, you call to get on the line and you talk to Disco Steve, remind him just how bad that music is. And, you could, if it was the same price to go to a 4-star restaurant and the same price to go to McDonald's, could I see every once in a while going to McDonald's? Yeah. Could I see making a habit of it? No. I just don't understand it. It was bad music then. It's bad music now. It's like Zydeco. Is there really any need for another Zydeco music? It all just all sounds the same. There wasn't a lot of inventions. You kind of got to the end of it, and well, the number one song right now is "Gotta Get Lucky, Gonna Get Lucky, 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 Gonna Get Lucky, We're Gonna Get Lucky." It's "Lucky, Lucky, Lucky, Lucky" by two guys with robot heads. There's just so many better songs out there and ways to spend your life. Why would you want to do it with just bad disco bar music that only is enjoyable if you're drunk and it's 1 a.m.? Anyway, I want to thank Z in the Den because he brought up the article and some of the articles about China. And I just kind of vaguely went over it, and that is it's the equivalent of their LIBOR. So if you do a search for it, it's called SHIBOR, SHIBOR. That's their banking rates, and I suspect we're going to see the markets move in China. Normally, this just doesn't get quashed in a day, and I suspect has to do a lot with these invisible or ghost towns that they built. And eventually, that's going to work itself out. And knowing Chinese, they're always trying to steal from at least from themselves and the other government in communist China. Most of them that come here, say 99.9% of them are love to play within the rules. Over there, everybody's always stealing from everybody else. Just sets a corruption, a air of corruption, and I think that we may be seeing finally, just like the market when it broke here with Lehman Brothers in 2007, 2008, maybe we're starting to see the first chunks in that. But when you see percentage changes in a day in what banks charge other banks to loan money, and when you see that flaky internet ideas are charged lower interest rates, that tells you something about the banking structure right in China. And like I said, I have a feeling this has a lot more to do with it than instabilities in Japan itself. A lot more in the dark and in the shadows in China than there is here. And anyway, I wanted to show my newsletter from last night and just read it quietly. And that is, for all the sound and fury, there was a little change in the broad markets and the volume of supply. Oh, we're out of time. We continue to see markets unstable, and in China, we're seeing interest rates spike. We're watching the Asian Open tonight. Expect we could see that next leg down start then. I think probably a pretty good call, but big clue out there with China. We'll see you tomorrow, same bat channel, same bat time. No Disco Steve.